This is Tour Dinar Inside, your source for unfiltered truth. We cut through the noise to bring you the real story on the Iraqi dinar. Let's be brutally honest for a second. If you've been waiting for the Iraqi dinar to magically revalue overnight, to make you an instant millionaire because of a secret meeting or a geopolitical deal you read about in a shady online forum, I need you to hear this next sentence loud and clear. The Central Bank of Iraq just ripped that fantasy to shreds with a public statement so definitive, so data-driven, and so deliberately boring that almost every major news outlet completely missed the terrifying twist buried inside it. They announced that their monetary policies have successfully pushed inflation to what they're calling historically low levels, and with a tone of finality, added there is no intention to amend the exchange rate of the IQD. Now, on the surface, that sounds like boring central banker talk, the kind of thing you scroll past. But that's exactly what they want you to do. Because if you actually dissect this statement with the cold, hard data from the Iraqi Ministry of Planning, the IMF, and global commodity markets, you realize this isn't just a denial of revaluation rumors, this is a dire warning about the very foundation of Iraq's economy and a silent admission that a revaluation, in the way dream sellers pitch it, would be an economic nuclear bomb for the nation. Think about that phrase, historically low inflation. Sounds fantastic, right? It implies stability, growth, prosperity. But here's the twist that changes everything: context is king. When the CBI says historically low, they're comparing it to Iraq's own brutal history of chaos. We're talking about a country that has seen inflation soar past 50% in the aftermath of wars and sanctions. So, getting inflation down to, say, 4% as some recent reports suggest, is a monumental achievement for them. But compare that to the global benchmark for stable economies, which target 2% or less, and suddenly the picture shifts. This success is still a level of inflation that would cause panic in the United States or Europe. But the CBI is celebrating it because the alternative, the ghost of hyperinflation past, is so much worse. This leads us to the real, unspoken reason behind their ironclad no to changing the exchange rate. The current rate, around 1,320 IQD to $1, isn't arbitrary. It's a life support system. Iraq's government is almost entirely funded by oil revenues, which are paid in US dollars. That dollar inflow is then sold by the CBI at the official rate to finance the government's massive budget, which pays the salaries of nearly 4 million public sector employees. This is the dollar auction you might have heard about, a mechanism that dictates the nation's financial survival. If you abruptly revalue the dinar, say, make it 1 IQD to $1, you instantly vaporize 99% of the government's budget in dinar terms. The math is simple and catastrophic. The same dollar revenue would now translate to a fraction of the dinar needed to pay those salaries and fund services. The state would go bankrupt overnight. The CBI isn't guarding the exchange rate out of stubbornness, it's guarding it to prevent immediate societal collapse. So, the shocking truth hidden in this dry press release is this: the very economic instability that revaluation gurus claim the new rate would fix is the precise reason it can never happen under current conditions. The low inflation they've achieved is fragile, built on a mountain of imported goods and that constant flow of petrodollars. Revaluing would shatter that delicate balance, import prices would crash in unpredictable ways, and the black market currency traders, who currently operate at a rate far worse than the official one, would feast on the chaos. This announcement isn't a setback on a path to riches, it's a stark lesson in real-world economics versus internet fairy tales. The CBI is telling you, in the clearest terms possible, that their sole mission right now is not making foreign speculators rich, but preventing Iraq from spiraling back into the economic abyss that defined its history. And every single data point on their balance sheet screams that a revaluation is the fastest route back into that abyss. They have chosen stability for 40 million people over profits for a few million hopeful holders. That's the uncompromising reality check. Now, let's pull the camera back and expose the global financial stage where this Iraqi economic drama is actually playing out, because the CBI's statement isn't happening in a vacuum, it's a desperate defensive move on a chessboard controlled by the United States Federal Reserve, and understanding this is the key to seeing the next 5 years of the dinar's fate. The real story behind no intention to amend the exchange rate has little to do with Iraq's domestic wishes and everything to do with a brutal, unyielding pressure campaign from Washington. Here's the twist that the mainstream financial analysts aren't connecting for you. Iraq's historically low inflation is less a triumph of Baghdad's policy and more a forced consequence of America's war on money laundering and its weaponization of the global dollar system. For years, Iraq's primary lifeline, the dollar auction at the CBI, was a sieve. Billions were being electronically whisked away to banks in Turkey, Jordan, the UAE, and Iran for everything from legitimate imports to sanctions-busting schemes, creating a massive gap between the official rate and the parallel market rate. This was the true source of internal inflation and currency instability. Then, in late 2022, the U.S. Federal Reserve's New York branch, the gatekeeper of international dollar transactions, dropped the hammer. It began imposing strict, granular compliance rules on every dollar transfer out of Iraq. Suddenly, Iraqi banks had to provide exhaustive documentation proving each dollar request was for a verified, legitimate import down to the shipping invoice and final destination. The Fed effectively became Iraq's financial auditor. This wasn't a suggestion, it was an embargo on easy dollars. The immediate result was a liquidity crisis within Iraq. Dollars became scarce on the street, and the black market rate skyrocketed past 1,600 IQD to the dollar, exposing the fragility of the official peg. The historically low inflation the CBI boasts of today was achieved through a painful squeeze. By restricting the dollar outflow, they artificially contained the money supply growth, but at the cost of making it harder for legitimate businesses to import goods. The stabilization is a side effect of economic constriction. So when the CBI says there's no intention to revalue, they are also quietly admitting they have zero room to maneuver. The exchange rate is locked in place not by gold reserves or a strong economy, but by a complex, fragile triangle between the CBI, the U.S. Treasury, and the Federal Reserve Bank of New York. Any unilateral move by Iraq to revalue would be seen as a direct challenge to this financial control, potentially triggering a devastating response. The Fed could further tighten the dollar spigot or, in a worst-case scenario, cut off Iraqi banks from the dollar clearing system entirely, a modern-day economic death sentence. Therefore, the path to any future change in the exchange rate is not paved with secret meetings or geopolitical favors. It is paved with agonizingly slow, technical reforms demanded by the United States. We're talking about building a fully transparent, automated electronic platform for all foreign currency transactions, rooting out corruption in the banking sector, and weaning the budget off its total dependence on dollar-denominated oil sales. Until Washington's financial authorities sign off on these reforms, the peg is a prison of necessity. The shocking realization here is that the revaluation dream is not just economically impossible for Iraq internally, as we discussed, it is politically impossible under the current architecture of American oversight. The CBI's monetary policy is now, in large part, dictated by compliance officers in Lower Manhattan. The low inflation is a symptom of this external control. So, the next time you hear a rumor about a pending revaluation, you must ask one question. Has the U.S. Treasury issued a statement congratulating Iraq on its world-class financial transparency and anti-money laundering controls? The silence you hear is your answer. The dinar's fate is no longer solely in the hands of Baghdad, it is held captive in the intricate, high-stakes world of international dollar diplomacy, where stability for America often means stagnation for Iraq. This is the profound, unspoken truth behind that simple denial. So, we arrive at the ultimate crossroads for every dinar holder, a moment of clarity forged from the hard truths of Iraq's internal fragility and its external subjugation to the dollar system. If the path to a sudden, life-changing revaluation is a fantasy, and the current stability is a carefully managed illusion of constriction, then what is the actual, data-driven future of the Iraqi dinar? This is where we separate desperate hope from strategic understanding, and the roadmap is not found in rumor blogs, but in the recent sovereign bond issuances of the government of Iraq and the latest Article 4 consultations from the International Monetary Fund. The real, achievable endgame, the one that could actually improve the dinar's value meaningfully over the next decade, is not a spectacular overnight flip of a switch, but a grueling, multi-year marathon of incremental appreciation. Think not of a quantum leap from 1,320 to 1, but of a painful, hard-fought crawl from 1,320 to maybe 1,200, then to 1,100 over half a decade. This process is called a managed float, and it is the whispered plan within every serious economic proposal for Iraq's future. Here's how it would realistically work, and why it's so difficult. First, Iraq must successfully transition from a de facto US dollar peg maintained by the auction to a true, transparent currency regime. This means building a diversified economy that generates non-oil exports, agriculture, minerals, even manufacturing, so that demand for dinars comes from global trade, not just from the CBI selling oil dollars. Imagine if the world wanted to buy Iraqi dates or cement or lithium and had to purchase dinars to do so. That creates organic, sustainable strength. Second, and most critically, the government must slay the monster of its own bloated, dollar-salaried public sector by implementing the long-promised, perpetually delayed white paper reform agenda, which seeks to privatize state-owned enterprises and shift the workforce to a productive, private economy paid in dinars. This would drastically reduce the government's desperate, monthly hunger for dollars just to make payroll, taking immense pressure off the exchange rate. Each successful step in this reform agenda, verified by the IMF and applauded by the US Treasury, would earn Iraq a tiny bit of financial sovereignty back. And with each verified step, the CBI could allow the dinar to strengthen by a few percentage points, a cautious, controlled appreciation rewarded by the international community for good behavior. This is the exact opposite of the revaluation fantasy. It is slow, boring, politically treacherous, and entirely dependent on a fractured Iraqi parliament passing laws that would dismantle the very system of political patronage that keeps its members in power. The shocking twist, however, is that this grueling process is already quietly beginning. The recent issuance of dollar-denominated bonds by Iraq was not just to raise cash, it was a critical test of international investor confidence. The rates and demand for those bonds are a report card on Iraq's perceived reform trajectory. Every time Iraq meets a US Treasury compliance benchmark on anti-money laundering, the parallel market gap narrows slightly. This is the glacial pace of real change. Therefore, your decision as an investor or observer boils down to this: are you betting on the miracle, or are you betting on the marathon? The miracle is a seductive story of hidden vaults and political deals, but it has a 100% failure rate across decades. The marathon is a story of economic reports, bond yields, IMF review statements, and painful legislative votes. It is unglamorous, but it is the only thing that moves the needle in the real world. This brings me to my final, crucial point for you. The greatest risk you face right now is not missing a sudden revaluation, it is information paralysis, being drowned in an ocean of conflicting rumors while the subtle, decisive indicators of the real marathon pass you by unnoticed. To navigate this, you must change your source of intelligence. Stop listening for the siren song of dates and codes. Start learning to read the quarterly reports of the Central Bank of Iraq, the statements from the Federal Reserve Bank of New York, and the IMF's fiscal monitoring updates. This is where the true narrative lives. And that's exactly why I want you to take one specific action right now. If you've made it this far, you're clearly someone who seeks the underlying truth, not just the comforting fantasy. So I'm asking you to put that intention into practice. In the comments below, type the word marathon. Why? First, it signals to me and to this entire community that you're choosing the path of realistic, long-term understanding over short-term hype. Second, it holds you accountable to this new mindset. And third, and most importantly, for everyone who comments marathon, I will personally pin a direct link in the top comment to the latest, most critical IMF Executive Summary Assessment for Iraq, the single most important document that outlines the next steps in this grueling economic reform process. Don't just listen to me, go read the primary source document that the entire financial world is using to judge Iraq's progress. Get your information straight from the horse's mouth. The fantasy is over. The marathon has begun. The question is, will you sit on the sidelines waiting for a miracle that will never come, or will you finally understand the real game being played? Type marathon below, get that document, and let's start seeing the future with clear eyes.